Hello, this is Ahura from Auto Markets with global economic outlook in the week ahead, which is going to be the 26th week of the year. As always, before checking the week ahead, we will review the previous week data and events that we had last week, and then we can see the data in the week ahead. Previous week, it was a very busy week with the central bank meetings in one hand, geopolitical tensions on the other hand. Central banks in Australia and United States and United Kingdom, they didn't change the rates, same as China, but in Swiss, but the Swiss National Bank, but the Swiss National Bank had a rate cut by 25 basis point, as the Swiss franc was very weak in one hand, and on the other hand, the inflation in the Switzerland was falling so rapidly. So the central bank had a room to cut the rates by more than previous expectations. On the United States front, we had a data that showed the US economy is falling much more, while generally the data we had from the United States, from the Europe and other economies, they showed that the overall global economy is falling, especially in the United States. If you go and check, for example, the Thursday's data, you can see that with housing market was falling, with the housing starts falling by more than 5%. In just May. But also at the same time, we had the labor market data on a Thursday. If we check the Thursday, if we check the labor market data, we can see the initial jobless claims increased by 238,000 requests. You see that the number of the labor that they have been applying to unemployment benefits, it was about 210, 215K in the previous months, but now it's increased to almost the same level pre-pandemic, the same level that we had pre-pandemic. It was 238K, 240K, 250K. It was those levels are the levels that we had pre-pandemic, pre-COVID pandemic. So the labor market shows some sign of the more weakness in one hand, and on the other hand, the economic data also we can see in economic data also more weakening numbers. On Friday also we had ADA number, US, here we go, existing. The service PMI and on Friday, we had a service PMI increasing from 54.5 to 54.6, but it was not that important. But while we can see that US leading index, here it's the US leading index fell by 0.5% in May. The US leading index is the composite index of the several more important economic indexes that shows the overall movement of the economy in the countries. In the US, it's falling by more than 0.5% in May, which shows that the global overall economic condition in the United States is not as it was expected. You see that, but if you look at this, somehow we had opposite numbers. The U.S. leading index shows the negative numbers, but stock market shows fast improvement, new records, and stuff like that. Those opposite reactions and the numbers and the conditions that we have in the market, they have a very interesting signal. These signals telling us that we have to be careful. Maybe stock markets are overpriced, and we have to be very careful about our trading and investment decisions. That's what these numbers, they can tell us when we have such a big differences between the numbers and between the market reactions and the stock markets. This on the economic data we had last week. For the week ahead, as I told, in the geopolitical tensions, if you check the geopolitical tensions, we know that Israel talking about attacking to the Lebanon and Hamas in Lebanon, which if it happens, means that geopolitical tensions will increase more and more. It can create a very, then the war will not just stand around Israel and Lebanon. Then the countries such as Iraq, Syria, Iran, Yemen, and other countries also, they can join these tensions, which means very crazy condition on for both geopolitical situation and economic conditions. I hope that will not happen, but if it happens, we can say that safe haven demands can increase so fastly, like gold, like the US dollar and other stuff, silver and stuff like that. But at the same time, it can increase the oil price as well. So the oil price, one of the reasons that the oil price also increased in the last weeks was this increasing the tensions in in Middle East. Out of that, if you look at the last week and the things that happening after President Putin's travel to the eastern countries, such as eastern countries in Asia, such as Taiwan, Thailand, and where he was, I forget the name, and also the North Korea. Those countries that he's traveling right now, those are countries they have a very good relation with the United States, with China as well. But that can be kind of sending some alarms and the warnings to the United States that if you help more to the Ukraine in a war that they have there, they can find some new alliance in the countries among the countries that previously they were somehow the alliance of the United States. Tensions are increasing there, same tensions we have still in Ukraine. But on the economic data front, the week ahead will not be such a busy week on the economic data, especially in Europe. In Europe, the only important data we have probably is going to be the GDP numbers of British GDP numbers, which we're going to have on Friday. GDP is supposed to increase a little bit much better than the previous quarter on first quarter, which means that the UK economy is getting started to recover itself. We talked before also about that. But out of that, we have some inflation numbers, same like, for example, like in France, Italy, and some other Europe members. But overall condition, economic calendar in Europe will be we will have a quiet week. Out of the Europe and out of the US, we have a Mexican central bank meeting for interest rate decision on Thursday, which is expected to cut the rates by 25 basis points. And also we have a central bank meeting on Tuesday, probably, or Thursday, in Turkey, where the central bank in Turkey is supposed to hold the rates at 50%, which is the current rate. Probably from the next month, they will start cutting their rates. For now, Turkish central bank can hold the rates at the 50%. I'm trying to find it in the calendar. Yep, it's here. Higher rates for such a long time in Turkey, they somehow killed the economy. And so the central bank will not have a choice to start cutting the rates to support the economy. The hawkish policies that the central bank and the government they had in the previous months, they could somehow help the inflation to hold at around 3.5%. But at the same time, they killed the businesses, and that's going to be a very tricky condition, create a very tricky condition in Turkey. So probably the central bank can start cutting the rate from next month. But if we go and look in America, North America, we will have the Canadian inflation. Canadian inflation is supposed to increase a little bit in May. We have Canadian inflation numbers on Wednesday or Thursday. Up on Tuesday, we have Canadian inflation numbers on Tuesday, where the inflation is supposed to increase by 0.3% in May. Higher inflation, a little bit recovery of increasing the inflation will not change the central bank policy in Canada. The central bank policy, probably the central bank will hold their rates at the current rate in the next meeting, but from the August, they again they can start cutting the rates. That's the plan that we had, and probably this inflation numbers that we have on Tuesday will not change anything on the central bank policy. And in the United States, on Tuesday, we will have a CB consumer confidence. CB consumer confidence fell to 90 from 116 that we had 3 months ago. It fell to 97 2 months ago, and then last month it increased to 102 from 97. But this month again, in May, again, it's expected to for June we expect to see the CB consumer confidence falling back to 100 level, which again, along with other data, along with other numbers, shows that the economic condition in the United States is getting more pressures. On Wednesday, we have a housing numbers, housing data. New home sales supposed to increase by 1.5% in May after falling by 4.7% in April. The lower rates in May, also the lower prices in the housing market can increase the sales, but 1.5% increase is not a big number that we can be proud of that. On Thursday, we have a GDP numbers. The GDP numbers in the United States could be very important, but as you know, those are the data that they can affect the market in the long term. They will not affect it weekly, but the generally better than expected data can support that we are expecting to see the GDP to improve on the first quarter by 1.3%. This increase of the 1.3% increase probably can support the overall market condition that the economy is fine, but while the economy is kind somehow fine, as I told earlier, we have more signs from other side that this fine condition is getting weaker, and we will face some challenges in the next months. As you can see, if you compare the 1.3% increase with 3.4% that we had in the fourth quarter of last year, it's very big difference. On Thursday, we have also the durable goods orders. Durable goods orders supposed to increase by 1.5%, most probably in May, but to fall by 1.5% in May. But the main reason of this falling will be the lower aircraft orders, but this, if we excluding the transportation and aircraft, we can see 0.3% by 0.4% increase in overall durable goods orders numbers, excluding transportation. In a previous months, we had a small weaker number in the retail sales. This retail sales also can somehow cause a weaker number in, effect on the durable goods orders as well. But generally, durable goods orders have been increasing in a previous quarter, but still, if you check with previous year, you can see lower digits, which means that, again, I told U.S. economy is getting to face some more challenges. But the main data for the week will be the Friday's PC personal income and spending, and the core PC price index, which is the Federal Reserve main number to compare the inflation with the previous months. And the Federal Reserve, when the Fed is talking about the inflation, it's referring to the PC price index and core PC price index. This is the main inflation number that the Federal Reserve can plan, somehow talk about that. And when they are making a policy, they are planning their policies, monetary policies, they refer these digits as an inflation number, the core PC price index and the PC price index. It's expected to increase with 0.2%, which is slower than the previous months, but that increase will not change anything in the central bank policies right now. Probably they will hold the rates in July, and they can start to cutting the rate on September. So weaker digits will not change the policies for the July and August meeting and September meeting. But if we see the inflation is falling much faster, while we had the very slow, very weaker, the very weak numbers in the labor market as well, then probably the market can again start counting on 2 rate cuts in 2024, and not only 1 rate cut, which is right now is expected. So these numbers will be very important. So and they can change the market condition if we saw a very big difference between the estimates and actual data. But generally, what we're expecting to see the 0.2% increase on a monthly case and an annual case, probably core PC price index can fall to 2.5%. That's what the general market condition is. If we go and check the chart, we can see, let's check the chart. Let me open the chart. This this is a volatility chart. You can see this US volatility index, when we see that the market condition volatile and risk of increasing in the market. That's one of the main reasons that support the US dollar as well. US dollar is an overall uptrend, which is one of the main reasons for this current uptrend is its safe haven demand, which is expected to continue. So we do not expect to see such a big fall in US dollar index, even if we see this PC price index falling so with the big digits, because US dollar, yeah, they can get some pressure from the possible expectation, the possible change in Federal Reserve policies, but at the same time, the overall market condition with the higher risk that we have, they can increase the US dollar safe haven demand and hold and soften this possible downtrend which is expected to see by the end of this week. But at the same time, if you go to check, if you check US gold chart, where's gold chart, XA US dollar, the gold. Yeah, here's the gold. Here's the gold chart. As you can see, the gold after the touching the all-time high on May, gold had some correction in the chart, and you can see this some correction in this chart, but still it's above 38.2% of its Fibonacci level, which means trading above this level, $2,275, will hold the gold in an overall uptrend, and this uptrend can continue further. Overall market condition, geopolitical tensions will can again increase the gold safe haven demand, which means for gold, we are still expecting to see higher digits, and this downtrend that we had in the previous weeks can be just correction and not changing the trend. If the gold price fall under its 61.8% of its Fibonacci level, which sits at 2,163, then we can see probably trend changing. But above this level, we can still count on higher numbers, and uptrends can continue further, especially as long as it's trading above its 38.2% of its Fibonacci level. On the stock market, S&P 500 lost some of its gains after the touching all-time high on Thursday. This downtrend is expected to continue this week as well before Friday's meeting. The Friday's meeting and Friday's data, the Friday's PC inflation and PC personal income and spending data can create the new trend in the market. Either it will continue to falling further, or it can get back to our overall uptrend that it has right now. But right now, we can say technically, yeah, it's increasing, but we have some challenges, we have some corrections. This correction can go further towards 5,400, but if we fall under 5,400, the downtrend can start from there, and if we fall under 5,280, then we can say that the overall uptrend that we have right now can change to the overall downtrend. That's the market condition in the stock market. About the oil, let me bring the oil chart. Oil increased sharply, very sharply in the last week, as I told, because of the geopolitical tensions in one hand, the summer demand in other hand. This sharp uptrend, this sharp increasing, will need some correction, but overall condition is a bullish, and the oil can go further about $80 again this week. And cryptocurrencies, Bitcoin fell even after that. We had a news that the market strategy about more than 11,000 new Bitcoins, but still that cannot change the market condition, and the market is still falling. We should not forget that the Bitcoin overall, this falling that we had, it can be kind of somehow the correction. The overall uptrend can change only if it fall under 62,000 right now. 62,000, falling under 62,000 again will open the door for 57,000, and under that it can open the door for 52,000. But right now, as long as it's trading above $62,000, means bulls have more power in the chart. That's overall market condition and data and news that we had. If you had any other question, please don't forget to write down under this video on Instagram or YouTube. I will try to get back to you as soon as possible. Talk to you soon. Bye.